1% drop in headline earnings, that's really drastic. What went wrong?
I don't think anything went wrong. I mean, we are at the mercy of prices and exchange rate. But it's what we do about it that's important. And I think if there's one key message that I'd like to give the viewers is that our response has been, in a reactionary environment, extremely proactive. And I'm exceptionally pleased at the way the operations have curtailed costs, managed cash, and looked after the balance sheet. So whilst there's a pronounced drop, and I mean it's sort of multi-year lows in commodity prices, partly offset by the exchange rate, but we still have healthy margins operating margins in a number of our businesses, but the cost position has come down pronouncedly, and that will bode us well into the future.
In your bid to cut costs, to what extent has that had an impact on job cuts, if at all?
It certainly had a big impact, but the price falls in many of our commodities were substantially deeper, harder than what we could mitigate out of the exchange rate. But it certainly has helped, there's no doubt in it. And it certainly helps the South African business. Obviously, it wouldn't help the copper business, which is Zambian-based, which is US dollar-based.
Mike, you've been having problems with the Lubambe mine, copper mine in Zambia, and it seems like it's costing you more money than it is actually making money for you. So what do you plan to do with that asset?
It is a concern, and it is a challenge, and it was really based on the timing in the market. So that's a mine in ramp-up, which is a 4-year ramp-up program, and halfway up the cycle we get the cost drops in copper, and we've seen a pronounced drop in copper price, and particularly in the US dollar, and it has also operational challenges. So we are reviewing that operation and continue to review it. I want to just stress one point. 6 months ago, we gave them a target of moving from a cost base of $3.10 a pound to get us to $2.50. They've achieved $2.48, but the price is $2. So it's you've got to keep on chasing, so in this environment when it is demanding a lot of cash from the partners and it's not earning accretive, we have to review all options. It's the responsible thing to do.
The prices will recover. Many people are trying to guess when that will be.
Yeah.
And you can only push so hard when it comes to cost reduction. Now, if this situation continues as it is, and you push as hard as you do push, or you can, what ultimately may have to happen in the sector in general?
I think it's certainly an issue of supply-demand. So there's too much supply in the market. And if you're on the higher end of the cost curve, undoubtedly those players must exit, and then you get the supply balance and you get normality, and that's my issue. The timing is not in our hands. We must manage what we can, and that's cost, getting ourselves on the lower end of the cost curve, operating below the 50th percentile on the global cost curve, and that's also shifting is fundamentally important. And I'm very pleased today to say the majority of our operations, as I've alluded to earlier, have responded accordingly, and we are well positioned on the cost curve.